Assalamu alaikum, everyone, and thank you for joining our quarterly report for RERL on time. I welcome you all, and I would like to start this meeting with a short recitation from Surah Fatiha. أعوذ بالله من الشيطان الرجيم بسم الله الرحمن الرحيم الحمد لله رب العالمين الرحمن الرحيم مالك يوم الدين إياك نعبد وإياك نستعين اهدنا الصراط المستقيم صراط الذين أنعمت عليهم غير المغضوب عليهم ولا الضالين. Following this, we would like to start the proceedings. The first initial item on the agenda is that we would have a welcome address from our CEO. Our CEO, Muhammad Ashrafullah Sahab, is the Chief Executive Officer of Rehbar since the beginning of this financial year. And he has a very rich experience in banking and finance. He was with State Bank of India and subsequently with many Islamic banks. He completed his illustrious career with Dubai Islamic Bank as the head of risk review over there. So I would invite Ashrafullah Sahab to give the welcome note.
Assalamu alaikum. I'm Muhammad Ashrafullah, the CEO of Rehbar Group. On behalf of Rehbar, I welcome all the participants in this webinar. And again, on behalf of Rehbar, I would like to thank you for being an investor, and we value the trust you have put in Rehbar. I would like to begin this address in the quarterly report with the prayer for the mercy from Allah and early relief from the prevailing pandemic, which has humbled the entire humanity and the world around us is facing turbulence. Thankfully, Rehbar has been receiving continuous support from the existing investors, and also the number of new investors has grown in the recent months. The trust reposed by all the investors will keep building Rehbar's strength and a great responsibility on us to deliver the best possible results. Again, thankfully, most of the entities wherein Rehbar has invested the funds have stood strong and are sustaining their businesses with faith and optimism. Rehbar has extended a helping hand by offering a limited moratorium on rents payable, which has benefited the customers in easing their financial stress and liquidity. In this regard, we draw your kind attention to our earlier quarterly communication, wherein it is clarified that the moratorium has not impacted the profit share of Rehbar as it is spread over the remaining lease period. Although majority of our customers have managed regular repayment of rentals and shared their profits, however, only a few customers have been encountering business difficulties, mainly due to the displacement of labor or reduced demand for their products. We strongly believe that all our customers will soon normalize their operations and meet their commitments. More importantly, Rehbar believes that its prudent choice of borrowing customers and asset-based financing has been the savior in these difficult and uncertain times. I would like to just brief about our financial performance for Q2 FY 2021. We are presenting in this report the concise financial performance for the second quarter of the financial year 2021 of Rehbar's SPVs, Rehbar Equipment Rental Private Limited, that is RERL 1 and 2. The consolidated net profit earned for the quarter is 98.9 lakhs, and the share of the profits attributable to the debenture holders is rupees 81.7 lakhs. This allows us to gratify our most valued debenture holders with an annualized return of 9.6% for this quarter. This is a testimony of a sustainable business and a strong performance even in these times. Moreover, Rehbar has also been able to strengthen its own financial position through allocation of a share of profits to the prudential reserves. And importantly, Rehbar has not recognized the income from assets which have been considered as doubtful for the present. Rehbar has been exercising extreme caution and prudence in the deployment of funds. In view of this, although the investment received has grown to rupees 34.4 crores, the deployment of funds is limited only to about 89%, that's 30.4 crores. And hence the annualized ROI or return on investments has marginally decreased to 9.6%, despite an increase in the gross return on fund deployment. Rehbar has been highly thankful to all its debenture holders, and we believe that the main reason for the steady growth in the investments is your support and willingness to recommend Rehbar to your family and friends, and your continued support. We assure you that our focus will be on improving productivity of capital employed, investments into strong businesses, and excellence in customer service. Jazakallah. I would like to take Rashid to take over and then present to you all the details. I'll be back with you soon, inshallah. Strong.
Thank you, Ashrafullah Sahab, for the welcome message. So we will now get right into the quarterly report, which I'm sharing now on the screen. So as you are aware, this is the second quarter of financial year 2021, and this is the second such webinar that we are having for declaring the results. Previously, we used to just send out the report, but we were not sure how well people are able to go through it and understand it. So which is why we thought we'll have a webinar every quarter, and we will actually walk our investors and potential investors through the report. So first, a brief introduction about Rehbar Financial Consultants. We are in existence for over 7 years now. 2013 May is when we had started. So as you might have noticed, everyone is on mute at the moment. The reason is that we will be taking questions only through chat, and we will be taking it at the end of the session. So I would request you, if you have any questions, you can just write them in chat and send them to the host, Zubair Bhai, who will then give me the questions and I'll try to respond to them. So as I was saying, that we are in existence for over 7 years now, and it has been a very rich and full of learning period for us, where we have been able to come up with various iterations and various models that fit the Indian economic legal framework, and that is suitable for the Muslims and for the people who want such a product in India. So our mission is to enhance Sharia compliant value creation for businesses and investors while bringing them together. So what this means is that we want to create value for both businesses and investors, and we want to do that within the limits of the Sharia. And we want to connect, the way we will do that is by connecting the businesses and the investors and bringing them on a single investment platform. So in this process and over this period, we were able to create an enhanced value for more than 100 businesses and more than 700 investors. And we have facilitated investment of over rupees 70 crores in various businesses so far. Currently, for the last 2-3 years, we have been operating through 2 special purpose vehicles. That is 2 companies which are specifically for this purpose, that they raise funds and then they do the investment. These 2 companies are RERL1 and RERL2. RERL1, that is Rehbar Equipment Rental Private Limited, and RERL2, that is RFC Equipment Rentals Private Limited. So these are the 2 companies in which we are facilitating the investment. We are taking the funds into these companies and then investing them with various businesses which we shortlist. And we will talk about that process in the next slide. So as you can see here, how does RERL work? So RERL, as I said, is the special purpose vehicle into which the investors invest. So you can see that investors are purchasing debentures, and the debentures that they purchase is by making a certain investment, and that investment is in the form of, it is in the multiple of 1 lakh. So the face value of each debenture is 1 lakh, and debentures are issued to the investors for the amount that they invest. So these are compulsorily convertible debentures, which means that they are debentures at the moment, but after 10 years, they convert into shares, equity shares. So any company can have two types of securities that they can issue. One is a equity share, and the other is a debenture. The debenture is more like a debt, but since it is a compulsorily convertible debenture, it will get converted into equity at the end of the period. So the investment happens through CCDs, that is compulsorily convertible debentures. And that the funds that are then raised in RERL are then invested into businesses. So the investment happens through various structures, lease, loan, etc. So this is the process through which the fundraising happens, and the investment happens through financial products, which can be an operating lease, which is the majority of our business is through operating lease. So we purchase assets, machinery, vehicles, etc., and we invest them in we give them to the companies who require the assets for their business. Or we give a short-term loan, which is like a project finance for a company which wants to complete a certain project. It requires some funds. So these are the various. Then there is a profit-sharing loan also, that it's for a little longer term, where the company shares the profits based on the profit it earns, or if there is a loss, then it also shares the loss with RERL. So the profits that come from the businesses through any of these structures then go back to RERL, and then RERL distributes them back to the investors. So this is the structure of how RERL works. Now, what is it that we offer to businesses? Because on the investment side, you are aware that we have the debentures and there is a profit sharing. But what is it that we communicate to businesses? And there might be some potential businesses also on this call. So for their information also, we want to let them know that what we offer is basically two products. One is ijara, the other is musharaka. These are the Islamic finance technical terms. Ijara is basically an operating lease in the common terms. That is, we purchase an asset and we give it on lease. It could be a commercial vehicle, it could be equipment, it could be plants and machinery. All these can be given in the form of lease. And this can also include sale and lease back. So we can purchase an asset and then lease it back to the same person who we purchased it from. What are the benefits of this operating lease product, that is ijara, for the person who is taking the finance? There are various benefits. One is there is no down payment involved, because we purchase the asset and we give it on lease, although we do take a security deposit in certain cases. The monthly payments compared to a loan is up to 40% less, because we do not need to get back the whole amount of the asset during the lease tenure, because there is also a residual value at the end of the lease. So unlike the loan where the whole amount has to be repaid, in the case of ijara or operating lease, only part of it needs to be repaid. So you can have a lower monthly payment on your lease. And then you can claim tax deduction. The whole rental that the company is paying can be deducted as an expense. And in a way, the equipment pays for itself, because the rent that you are paying for the equipment or the vehicle, you would get more than that from the business that it is generating. And the second structure that we have is musharaka. That is, there is profit sharing debt financing. So the reason we go for a debt financing is that it is a tax efficient structure. So if we go for equity financing, the company has to pay tax first, and then only it can share dividends with the investor. But if we as the investor give it a loan, then the profit that it pays us, it can call it an interest and have it as an expense. So it is a deductible from the tax perspective. And there is no fixed interest. If the company makes more profits, it has to pay a higher profit rate. And if it makes less profits, then it pays less profits. And if there's a loss, then even the principal can be reduced to that extent. And it is a participatory financing, and there is a sharing of risks and rewards. So that is the reason also why riba is forbidden in Islam, because it is unfair to one of the party. There is no proper sharing of risks and rewards. So if the company makes a huge profit from your investment, it will still give you only whatever is decided, 6, 7, 8%. Whereas that is unfair to the investor. And if the company makes a loss, it still has to pay what it has decided that it would pay, that 6, 7, 8%, which is then unfair to the business. So an interest-based system will be unfair to either of the parties. Whereas in a musharaka, there is a proper sharing of risks and rewards. So these are the two structures that we offer for businesses. And features that are common for all our structures is that we have flexible tenure options, and company is able to unlock its capital and avoid equity dilution. It is a hassle-free process. It is compliant with all applicable laws and regulations, and we have a transparent fee structure. I talked about the two initially, ijara and musharaka. In terms of the accounting terms, we have three products: operating lease, profit sharing loans, and project finance. So operating lease, these are the features. Like the minimum that the business has to take from us is 10 lakh rupees. We do not do lease for an asset which could cost 2 lakh, 4 lakh, etc. The range that we expect as a return is 16 to 18% on that. And the tenure can range from 12 months to 48 months. And the monthly rental per lakh approximate can be estimated as 2,500, assuming a 3-year rental and 40% residual value. Of course, this may vary depending on the asset. So some assets have a shorter useful life, then the residual value would be less at the end. Profit sharing loans are sort of a long-term financing of musharaka, where we have a profit sharing. And there, since there's a lot more study involved and a lot more due diligence required, so we have a higher minimum limit. So the minimum investment there is 30 lakhs. And the IRR ranges between 18 to 24%, because there is a higher risk. We expect a higher return also. And tenure could be anywhere from 12 to 36 months. A profit sharing ratio is fixed upfront, which means that I do not say that I want 8% or 10% on my principal or 18% on my principal. Rather, I say I want, say, 30% of the profits or 40% of the profits, whatever it works out to based on the projections. So that is what is fixed. We fix the profit sharing ratio and not the return on investment. And we also insist on a collateral. There should be some security to protect us against misrepresentation and fraud. But this will not be enforced in the case of a business loss. It is only enforced if there is a willful default or a misrepresentation by the promoter. A project finance is similar to a profit sharing loan, but it is a shorter tenure. So it could be from 3 months to 12 months. And here the IRR range is higher because it is a short-term loan and we need to then again reinvest the amount. So we look for about a 24 to 30% IRR. Again, the profit sharing ratio is what we fix, and we ask for a collateral security in this case as well. So this is what we offer for the businesses. Now we'll come to the investors. So we are catering to people who are looking for ethical Sharia compliant opportunities to invest their funds. And what we project to the investors is that we will pay 8 to 12% based on our history. Based on what RERL has actually given, it has ranged between 9 to 13.5%. But to be conservative, we say 8 to 12%. And this is the first of its kind investment scheme through the company model for halal conscious investors in India that we are aware of this type. And there is no lock-in period and there is an easy exit. So we ask for a 3-month notice or a 2-month notice, but generally within 1 month, we are able to give exit to the investors. There is a diversified investment. So earlier in our previous model, before the RERL structure, we used to have investors and businesses. We used to directly connect them and say that you invest in this business, we will only structure the deal and make the agreement. But now what we are doing is we are actually taking it into a pool and that pool is then investing. So you're not investing in a particular deal, you're investing in the portfolio, and the portfolio is what gives the returns, as we will see in the following slides. And each investor will be issued a debenture, which is a legally accepted and recognized security. And we conform to the highest standards in compliance and focus on quality. We have the necessary certifications and so on. And we have diligence screening and rigorous financial analysis process for businesses. So we have a multi-step screening. There's a Sharia screening, and there is a financial screening. And then if it crosses that, then we add the deal in our pipeline. And then there's various meetings and analysis that is conducted on the business. And only if it crosses all these levels, and then they agree to our terms and everything is as expected, only then the investment happens. And investments which exceed a certain limit, that is 50 lakhs or more, then it goes to another committee, investment committee, which is from our board of directors, and they again have to before it is it is dispersed, before it is executed. And we take and have the guidance and certification from prominent Sharia scholars. So we have a Sharia board of 3 scholars who are well versed in Islamic finance and the latest financial concepts. So coming to the performance, so this is the last quarter's performance, where as mentioned by Ashrafullah Sahab in the beginning, we had investment from debenture holders of about 34 crores during the quarter, and the deployment that was made was 30 crores. So as you can see, the deployment ratio is about 89%. And this is a little dip compared to the previous quarters. So the reason is that we were very cautious during the last quarter, that because due to the COVID scenario and due to the shortage in working capital and the financial crunch that many businesses were facing, a lot of them had approached us for funding naturally, but we had to be very selective about who we can fund and giving preference to people who we have already funded and we have seen the track record and so on. And businesses that have sufficient reserves, those are the type of businesses that we took investment in during the quarter. And the profit made in the quarter, gross profit, was about 1.2 CR, 1 crore 18 lakhs. And the gross return on deployment was about 15.5%, which was an improvement over the previous 2 quarters. We were able to transfer about 14 lakhs to reserves during the quarter, and there were expenses within the SPV of about 5.6 lakhs. And that gives a net profit of about 99 lakhs, which is what is the net profit for the investors, from which we take our fees, the AUM fees, which is 0.5% per quarter or 2% per annum. So that was about 17.2 lakhs. And the amount to be dispersed to debenture holders was about 82 lakhs. And because of the transfer to reserves in the quarter, 13 lakhs, our accumulated reserves has reached about 63.6 lakhs. So the 81.7 lakhs that was dispersed to the debenture holders translates to a return on investment of about 9.6% annualized. Like I said in the beginning, we'll be taking all the questions at once towards the end. So you can, if you have any questions on any of the slides, you can just send a message to Zubair Bhai and he'll pass on the questions to me. This is the return trends for the last 5 quarters. So you can see Q2 FY 19-20, Q3 FY 19-20, Q4 FY 19-20, and then the first 2 quarters of this financial year. So the gross return on deployment has taken a hit, that is the red line, mainly due to the COVID economic scenario deteriorating, etc. And it reached about 15% during the Jan to March and then April to June periods. And now we see a slight improvement up to 15.5%. Net profit which we have disbursed has come down from 12 to about 10%, 9.8, 9.7, 9.6 for the last 3 quarters. The reason why, even though there is an increase in the gross ROI on fund deployment from 15 to 15.5. The reason why the net profit did not increase is because, like I said, there was a uh, decrease in the deployment ratio. So the whole funds were not deployed because of we got a large investment during the last quarter, but we were a little selective about where to deploy the funds, and hence that deployment ratio has come down, which is why the net profit did not have the similar increase. Now, this is what I was mentioning about the deployment of funds. So you can see how the amount deployed is increasing every quarter. So from Q4, about 25 crores, it's gone to 27.7 crores, and now about 30.4 crores. So there is an increase in the deployment, but there was a larger increase in the investment amount during this quarter to up to about 34 crores, which is why the deployment ratio has come down to 89%. But this quarter, again, we have had some good deals during this month, October. So we expect a good deployment ratio in the next quarter, inshallah, in Q3. Coming to the diversification of our portfolio. So we have a large exposure to FMCG, which is one of the reasons why we were able to not have an adverse impact during the COVID, where FMCG was not really impacted to that extent. It was the discretionary spending like travel and other luxury items which were impacted, but the fast moving items did not really have any impact. In some cases, it was actually performed better than the previous months. So FMCG is a large part of our exposure. Then we have infrastructure, which is again something that is evergreen field, healthcare. So if you look at just these three, it's more than 75% of our business. Then we have some investment in IT, industrial equipments, and then other, which includes your logistics and some other fields as well. And in terms of the investment product split, so we have three products. One is so the largest one is the operating lease, about 70 to 73%. And then we have project finance, and then the smallest share is for profit sharing. So about 72 and then 27 approximately is the split between leasing and the finance activity. Now, quickly looking at the key deals that we executed in the past quarter, that is June to September, we have invested further with RERL. They are the country's largest furniture leasing company, and they have large private equity funding from large investment houses, and they have in-house expertise, and they have a good, very large client base, and it has done well even during the pandemic situation. The second one is SaaS Automation, which started in the year 2009. They have about 11 years of experience in turnkey projects, instrumentation, etc., for power plants, steel plants, etc. And they are a large partner of ABB. So one of the deals that we have done with them, actually they have done it in partnership with Siemens. It's a Pune-based firm. Then Calicut Biomedicals. It's a medical equipment distributor based in Kerala, and they have a wide range of products, and they import from China. This particular deal was actually a project finance where they wanted to import certain equipment from China and then sell it over here. So we funded that period of import until sale, and then shared in the profits that are realized from the sale. Finally, we have also started a new product, which is a finance lease, which is where we give housing support for creditworthy clients. So people who want to occupy a ready to move in flat, they want to purchase that flat. We have started on a pilot basis a housing model, and only in Karnataka we have done 2 deals so far. And we want to do a few more deals and then test the waters, see how it goes, and based on that expand the product to other geographies as well. But this will remain a small part of our portfolio, probably less than 10% even in the long run. And because it's also much costlier than what a person can get in the bank, so it's not a product that will go very fast. Only people who are very insistent on Sharia compliant funding would probably take this funding from us. Some of the deals in the pipeline you can see on the screen. Just to talk about two of them. The first one is seafood export and cold storage. This is a partnership based in Cochin, and they are establishing a cold storage facility. So we are purchasing all the equipment that are required in the cold storage and then giving it to them on lease. And they will then, start that cold storage and rent out the space to other companies, seafood companies who require the space, and they will earn much more rent on it than what they have to pay to us. And the fourth one, FMCG, 150. So this is basically ID Fresh that they are taking chillers from us, which they will be placing in the stores. This will be only in Bangalore, and it's about a 1.5 to 2 CR deal. So like that, we have some other housing proposals in the pipeline. We have some garment manufacturers which we are still looking at, and established logistic company which we are keen on going forward with, where we would buy the truck and give it to the company on lease. Then starting this quarter, we have also started to feature certain Rehbar clients who have been with us and who we want to tell the investors about. So basically what our philosophy is that the benefit that a business gets from us should not only be a financial benefit, they should also be able to increase their network, get exposure to our investors, get exposure to our other businesses. So that is why we want to feature a few Rehbar clients, 2 Rehbar clients every quarter, and publish it in our quarterly report. So these are the 2 that we published this quarter. The first one is Royal Mart Supermarket, which is a fast-growing supermarket chain in Bangalore. Currently, they have about 20 supermarket outlets and another 5 stores in the pipeline, out of which 3 have been funded by us. And the first store was opened in the year 2011. All of them are in Bangalore, and majority of them were opened in the last 5 years. The promoters are these 3 who are on the screen, Naufal, Salim, and Nasir. And they are a very dynamic trio, and they have each more than 20 years of experience in the retail sector. Each look after a certain aspect of the business, and they work very well as a team. And they have built a good brand in Bangalore that is well accepted and recognized by the masses. The second business that we featured is Prime Care Hospital. Prime Care India is a healthcare corporate providing innovative integrated healthcare in Bangalore. So in healthcare, you have primary care, you have secondary care, and tertiary care. So they started off as a primary care provider with the local clinics and the pharmacies and so on. And then they moved to a secondary care, which is the hospital. So they started in 2016, the hospital, which is shown on the screen on Road in Bangalore, was started. This is their P1, and they have plans to open 2-3 more such hospitals, P2 and P3. And also they have a plan to start a tertiary care center, which is for certain specializations such as cardiac or lung and so on. So this idea of prime care health centers where good healthcare is provided at an affordable cost, it was started by a few doctors in UK. Dr. Saeed, who is pictured here, along with his colleagues, Dr. Fayaz Chaudhary, Dr. Naveed Azam, Dr. Akram, and others, they decided to acquire skills and resources while working in UK to return to India and start health centers that offer ethical and transparent healthcare services. So they're also doing a commendable job. And even in the current scenario, they're doing a very good work in terms of both establishing a good business as well as giving back to the society wherever possible. So that was mostly about our core business, which is the funding of businesses. Then we also have a membership of AMFI, which is the Association for Mutual Funds in India. So we wanted to provide our investors with some diversification. So there are 2 Sharia compliant mutual funds which are available in India, and Tata Ethical Fund and Taurus Ethical Fund. So we are facilitating through our platform an SIP or a one-time investment. SIP can start as low as 1,000 rupees per month, and a one-time investment can be as low as 10,000 per month. 10,000 one time. So investors who cannot invest, generally our tranches are either 1 lakh, 2 lakh minimum investment. So if you do not have the funds at the moment and you want to park it in a mutual fund, that option is always available. And of course, the risks of the market and all is there. So you have to take proper advice before you invest in any of these options. So regarding portfolio allocation, we all want to invest our funds and we want to invest it profitably. But at the same time, there are other considerations like the risk, what is the liquidity, what is the amount we want to invest. So given all those considerations, we have to choose from the Sharia compliant options which are available to us. So real estate is there, gold is an option, or if you don't want physical gold, there are gold ETFs which are Sharia compliant. There are Sharia compliant mutual funds, which we just talked about. Sharia compliant stocks is there. If you are a discerning investor and you have some amount which you can risk on stocks, you can definitely look at that as an option. And then there are the Sharia compliant debentures, which we already talked about. So these are general guidelines. Of course, you have to get into more detail and if possible, consult a financial advisor before investing. Just a quick look at our achievements so far before we look at our team and then go to the Q&A. We have facilitated payments of profits to investors exceeding 17 crores since its inception and executed over 1,000 deals, that is 1,000 investments for more than 700 investors. And we have invested over 70 crores in over 100 businesses. And we are recipients of the IPSA Business Excellence Award 2017, which we received in Sri Lanka for promotion of Islamic finance in new markets. And we are certified for quality management and information security, ISO 9001 and ISO 27001. These are a quick look at some of our clients. ID Fresh, a lot of you are aware about. Prime Care, we have talked about. Timescan Logistics is a Chennai-based logistic firm, one of the larger in its space. Trojan Plywoods is a well-known plywood brand in South India. New Sign Digital, they are contractors for some of the largest airports and metro doing the digital signages over there. Furlenco, we talked a little bit about. Copy machines, they supply the coffee machines to five-star hotels, to e-commerce companies, to other hotels and cafes, etc. Aura is another FMCG company which is into dry fruits and spices, etc. Axion Marketing, they have a healthcare product. They have a Axe on oil which they give, and which is very well known, and it's available in medical shops in South India. So they are the sole distributors of this brand, which they import from Singapore. The last slide, I'll just introduce the Rehbar team. So our board of directors, first of all, Sharif Kottapurat Saab is the chairman and managing director. He's a BTech from BITS Pilani, and he's the CEO of Possible Solutions and ex-CTO of Sun Microsystems. He's also the managing partner of Mount Judy Ventures. MH Karkate Saab is director, investments and risk, and he is BTech from IIT Mumbai, and he's an MBA and CEO of Thasis. Ali Sharif Saab is our director. He is MSc from London School of Economics. He's also a pass out of IIM Ahmedabad. He is an ex-director with Deloitte, and he's also a principal at Mount Judy Ventures. Ibad Momin, he's a director. He is PhD in Islamic finance from INSEAF, Malaysia, and he's also a principal and partner in Mount Judy Ventures. Our Kerala director is C.H. Abdul Rahim Saab, who is well known in Islamic finance circles and in Kerala. He's a CA by profession, and he is a founder director of AICL and the ex-CFO of Kim's Healthcare Management. And Tamil Nadu director is KM Mohammad Ismail Sheikh Saab, who is an MBA, PhD, and he's done his PhD in Islamic finance, and he's a director of Manamuna Center for Interest-Free Business and Finance. Our Sharia board consists of 3 scholars: Mufti Khalid Saifullah Rahmani, who is the chairman. He's also the general secretary of the Islamic Fiqh Academy, India, and a member of the International Fiqh Academy, and also a part of the All India Muslim Personal Law Board. Mufti Yahya Muin is a graduate from Darul Uloom Zakaria, South Africa, and he's done his ifta with Mufti Radaul Haq, the Grand Mufti of South Africa. And he's currently based out of Mumbai. Mufti Tawfiq Mansoor Mazahiri is based out of Ratnagiri. He's a member also, and he's done his ifta from Mazahir Ulum Saharanpur, and he's done his qadi from Imarat Sharia Patna. Coming to the executive team, we have Ashrafullah Saab, the CEO, who spoke to you at the beginning. He's a certified internal auditor from US and previous head of risk from Dubai Islamic Bank, UAE. Azhar Ali is our chief operating officer. He is a BCom and has over 20 years of experience in banking and finance, and he's specialized in asset lending. Myself, I'm a head of investments, and I've done BCom and MBA from IMT Ghaziabad. In 2013, I passed out, and after which I joined Rehbar. Tanvir Ahmed, he's the head of deal monitoring and due diligence. He's done his course in architecture, and he's an educator by profession. He's also with us right from the beginning. And Iftikhar Rahi is the head of sales and marketing. He's based out of Pune, and he is an engineer and MBA with experience in financial services marketing. So with this, we would like to get into the Q&A session. So I have a long list of questions, which I'll inshallah take one by one, and I'll try to answer all of them as much as possible in the remaining 15 minutes. So Brother Shamil has asked, is there any third-party independent financial audit done, and would you share with investors? Yes, definitely. Our auditors, which I forgot to mention, are Verma and Verma, which is one of the most reputed audit firms in South India. They have over 120 staff in Bangalore itself, and they have already begun the audit for this previous financial year. Generally, the audit is supposed to be completed by September. Due to the COVID, there is an extension till December. So hopefully next month we plan on completing the audit, after which the audited report of both companies, RERL 1 and 2, would be available. Brother Kaleem asked, what is the IRR range? So I'm not sure if he's referring to the IRR on the business funding that we do. So I'll just go back to the slide where we talked about that. If you can see here, our IRR, target IRR ranges from 16% to 30%. So lease, which is a majority of our portfolio, we do between actually 15 to 18%. And the others, which we do in a minority, we target 18 to 24% or 24 to 30%. But in many cases, we end up getting less because it is a profit sharing. So whatever we get is what is realized. For the investors, of course, 9 to 13% is what we have given historically. Sister Maria Ansari says that she would like to understand how the final profit shared is derived in the quarterly report. The linkage is not clear. Share the calculation sheet with numbers from quarterly report and final profit shared. Okay. So I have not put the separate figures here for RERL 1 and 2, but the quarterly report, which we will email to you after this, will have the separate numbers for RERL 1 and 2. And if you even require more details after that, you can just send me an email and I can help explain, inshallah. But just broadly speaking, how this 9.6% works is that if you look at the amount due to debenture holders, which is 81.7 lakhs, and divide that on the average investment, 3435, is about 2.37% for the quarter, and multiply it into 4 is about 9.6% for the annualized. Brother Shamsur Rahman asks, what are the advantages, disadvantages of having high deployment ratio versus having deployment ratio of 90%? So if the deployment ratio is higher, then this gross return on deployment is passed on more efficiently to the investors. So if it is around 90%, then 90% of the profit gross return is what we are able to share with the investors. But if it's closer to 100 is of course not achievable, but you can see that we have generally been between 90 to 95%. So 95% is a target. We also want to have some funds liquid. If there is a good opportunity, we want to be able to invest. So there is a certain liquidity that we like to keep at any point. ROI of fund deployment is how much we get on the investments that we make. So if we have invested in the various opportunities, the operating lease, etc., and our target IRR is 16 to 18% or whatever. So what is actually realized from that after any bad debts or after any expenses on those accounts is what we are showing here as the ROI of fund deployment. At what price the debentures will be converted to equity at the end of 10-year term? Okay, Brother Zohair asks, what price will the conversion happen? So these are compulsorily convertible debentures, so they will get converted to equity, and the price will be at 10 rupees per share. It will not be at a premium. So if you have 1 lakh, a debenture of face value of 1 lakh, it will get converted to equity at 10 rupees per share, which means you would get 10,000 equity shares of face value 10 rupees each. And when an investor exits, will he be getting the portion of bad debts? No, that reserve is a part of the company. So only if you convert to equity, that reserve will be a part of your investment. Otherwise, you will exit at face value. Brother Imran asks, considering that profit is generated on the deployed amount, why does Rehbar charge based on average investment? Shouldn't it be based on average deployment? So the reason is that the average deployment, well, we are managing the whole portfolio and we are actively looking for opportunities to invest the undeployed funds as well. And the returns are being given on the entire investment. Calculation is being done for the entire investment. So I think it makes more sense. And it is also the industry practice to have the fees being charged on the AUM size. That is the average investment and not based on the actual deployment. The last question that we have is there any opening now? Someone wants to invest in Rehbar? Yes, we do have a tranche currently open, which is open only for the next 4 or 5 days till about the 28th or 29th is when we will be closing the tranche. So you can respond to my email saying how much you would like to invest, and I can guide you on the way forward, inshallah. So if there's any other questions, I think you can raise your hand and we can take it. I also have some chat messages. I'll just have a look at that. If we are not sharing profit and loss proportionately, it's not Sharia compliant. So we are sharing profit and loss proportionately. If there is a profit, we share it in the agreed upon ratio. And if there is a loss, it is shared in the investment ratio, proportionate to the investment ratio. So that we are following. Logistics, how do you ensure that they are Sharia compliant? They are not transporting any forbidden items. So yes, we do look into that. We find out what is the type of logistics, and only if we are comfortable with that, we go ahead. So the logistic companies that we deal with typically are into transport of electronic items, etc., from China. How do you see the markets recovering and new investment areas in addition to RERL 1 and 2? Most likely further investment will also be in RERL 1 and 2. And we feel that markets are recovering. People are getting back to normal and learning to live with the virus. Unfortunately, there is the human loss and the human aspect to that, which our hearts go out to all people who are affected by that. But Alhamdulillah, the economy is slowly seeing a rebound. Deployment to investment ratio, I think that is covered. What percentage of provisions are allocated for bad debts? Are there any risk mitigation steps for defaults? So we do, I mean, the whole, whatever reserve we are taking aside is basically for any unforeseen bad debts that might come. And we have all other risk mitigation aspects, which we take. We have the collateral, we have, personal guarantees, we have other security that we have, and there are legal cases that can be taken, checks can be bounced, etc. So there are various risk mitigation steps that are involved. What will happen to a lease if it is lost completely? Are they insuring their assets? Yes, there is insurance on the assets. We do insist in certain cases, especially vehicles, that the assets be insured because there is a higher risk of loss in such cases. What will be the maximum percentage payable to investors? So like we say, 12% is probably what we can expect on the higher side, but we have given even 13% in certain quarters. If someone wants to invest in Tata Ethical Mutual Fund, again, they can send me an email saying what is the amount they would like to invest, and we can guide them. If it is insured, is it Sharia compliant? Yes, our Sharia board is of the opinion that such insurance can be taken to protect the wealth of the investors. The amount deposited will not grow. No, the entire profit is being paid out as to the investors, apart from what is being kept as reserve. So there is no expectation for any growth in the investment. So I think we've taken quite a bit of questions. We have a few minutes left. I would request if Ashrafullah Sahab has any words to say or any points he would like to add, or otherwise we can inshallah close the meeting. I think you're on mute, Ashrafullah.
Sorry, I didn't realize that I had muted the conversation. Thank you for all the participants, and we are very pleased with the kind of confidence you have in Rehbar, and your support has been the backbone for us. When I came to Bangalore, when I first heard of Rehbar, that it's one of the intermediaries, it is one and only financial intermediary in South India, which has been taking up this kind of investments, risk-based investments, and also deploying where Sharia compliant in the entities which are engaged in Sharia compliant businesses. And I'm glad that with your support, inshallah, we will become a leading financial intermediary in India, and we'll set an example for the kind of financial institutions that are required for the benefit of the community, for the benefit of the nation, because most of our community members are either traders or artisans, and they need financial support from the surplus sector, and we all need support from the surplus sector that you are, for the needy sector that will employ people, will produce goods, and also add to the GDP of the nation. Inshallah, with your support, we'll do our best. And going forward, we will try and improve whatever we have been doing as on date. Maybe the pandemic may go away sooner or later. We are all praying that it should be sooner. Once it is so, then people are back to their normal life. Then inshallah, we'll be able to do much better than what we have done today. Thank you all, and inshallah, please do continue to support Rehbar, and request your friends, family, and friends to be part of Rehbar. Thank you. Assalamu alaikum.